Hello traders, Dan here. This is our weekend video review for the swing and options trader. Let's take a look at open positions, and we are extremely short biased here. In beautiful open positions, been trailing stops nicely, taking partial profits. Markets still look horrible, even though incredibly short term liquidation here, if you just look at the 15-minute charts, are very painful. 2 consecutive days for the bulls. Bears are having a good time. So we have 2 out of the money naked puts. Everything else is short stock, just pure short stocks. This Bitcoin we do every month. Short the way out of the monies. We shorted the $10,000 puts. IBM on this nice beautiful earnings gap up, we shorted way out of the money 130s. In the original intent, we said, you know what, we're going to give it a big old stop down here and we'll take assignment as a core long if needed. But once we quickly get into profitable territory, then I changed that bias, because why on earth do I want to sit through something that then negates this big green bar and we give up our unrealized nice gains? So we took half of the maximum profit, and it's either the day of or I think the day after. And so now just keep a stop under the prior bar's low just to protect the gains. So now let's look at open trades. Just shorts galore everywhere. We've had breakdowns on the daily or some other type of continuation breakdown, sell setups and reversals in the weekly with a price void. That was the message of the week. So we're still short this, and we're in trail mode. Disney, this was a bearish gap under a green bar, gap breakdown, daily, weekly. We've covered 2/3 of our position, but look at that, closing at the low with a topping tail, price void. It looks horrible. Daku, this is a little 180 reversal. Bear 180 breakdown right here at the 20 and the 50. Sell setup and reversal on the weekly. That's just textbook of what we teach. 5 in. Here was a bear sandwich breakdown. Sell setup reversal on the weekly. IBM we talked about. LVS we gave as a short on Friday. It has earnings next week, so I'm keeping a tight leash on that, but that surely looks lower. Roku, just breakdown after green bar ignored. Sell setup breakdown weekly. Zulu bull sandwich. There were so many of these bull sandwiches. So green bar in between these 2 red bars, multiple time frame alignment, breakdown daily, weekly. Just textbook. Zoom, same, green bar ignored, breakdown weekly, textbook. So you see that all those opens look fantastic, and we're just in trail mode. So let's take a look at closed trades now. We had a ton of beautiful shorts. Let me show you the spiders here first to kind of put it into context. So on this bullish reversal bar here from this bull sandwich where we were expecting lower prices, that was a shock. That was not expected. And then higher high, higher low bar, then it gapped up to resistance, and then the whole bottom just fell out right then. So we did take a couple longs in here. We'll review them. But I think this week we did a fantastic job playing defense on those longs, tightening stops and so forth. And then we did a fantastic job starting Thursday morning. Once we saw this little pullback fail of just kind of going crazy in the sense of hitting the accelerator on new directional shorts. So let's now put that in the context of our trades. Wolf here. This was a 1, 2, 3 closing breakout continuation. So even though the market did what it did, we bought the in the money $20 calls and had a nice little profit on that run, and we sold in the strength as we saw the market petering out there. Spiders, it wasn't the perfect entry because we were chasing a little bit, but we were fully bearish. I said in the nightly video on Thursday that we were fully short bearish. It was just a matter of what picture it was going to be to get us in more short. I was hoping for a 1, 2, 3 continuation, which would be an inside bar on Friday in the lower third of Thursday's range. And then we just start our shorting party on Friday under the lows. But look, it just continued. Look at a 15-minute chart. So here is the failed gap breakout on Thursday. And once we saw it fail, this right there, it should have held. Pullback reversal on minor support after a bullish gap. That's when we said, this is not holding, we're turning bearish. And we were already prepared because on Wednesday night's video, I was saying, look, even though the market's closed bullish, I have a ton of compelling short setups. So yes, we found a couple more, of course, but for the most part, we were just triggering all the shorts that we already were watching for the last a day or two. So here's the end of close on Thursday, this vertical line. And you can see gap down, wide range igniting, couldn't bounce. Right here is where we suggested this bear put debit spread on spiders right here. After these two topping tail rejected, we're like, this market is not, it's in trouble. And, you know, we had this big price void. So we bought an in the money bear put debit spread. And you know what? You know, I was tempted to hold some over the weekend, but the markets started at least at 3:30, having a nice little short covering rally, and we just decided to book our money. We made 27% return on that put spread in one day, and that's the beautiful thing of trading options is leverage and limited risk. A firm here. I was tightening stops on some things. This still totally looks lower, but I had tightened it. I had tightened it over the 20 MA here plus a dime, and that one little pop took us out. But we had a beautiful gain on that. You know, percent wise, I forget, over 10-12% or something like that. It's in the spreadsheet, of course. SYF. Little bank stock bottoming pattern, big W bottom here at the 20. We got the benefit of that run right there. Spot, I shorted the stock, had a nice run, and so we just trailed, and that was good. Another beautiful short. FedEx, right? The transports we've been watching on the climactic buy setup here. And this was one in particular. So over this was closing green bar, higher low retest price void, and you know we turned that into a day trade just to take our gains because we were concerned not only about the broader market but about the reversal in the sector here at IYT. So we just took our money. Snyder here. So notice, so another climactic buy setup in the transports. This one I think is a railroad, and look at that. So you know now you see why I'm putting this in the context of the spiders. That we made money on a bunch of longs also, although the big money was on the short. So we had a nice little run there. Just went into simple trail mode. When we started getting bearish on the broad, this is a VXX, so it's the volatility ETF. We were expecting a breakout. Let's see, we did it on the 11th. Expecting a breakout right here. We did a bull call debit spread, which gave us positive time decay. And when we had an open gain, I said, you know what? I was expecting the bull sandwiches on the spiders, like I said, for the broader markets to go down. And I said, I'm not turning this into a loser. We had like a 60-cent open gain, and it did stop us out break even. But this looks like it wants to, you know, now move up. This is the actual VIX, but you can't trade the VIX. VIX is just a mathematical formula for out of the money 30-day implied volatilities on the SPY, and but you can trade volatility ETFs and futures and options. But I was saying in the green room, I was actually surprised that the VIX popped this much, and VXX is, still there in that consolidation I just showed you. So if this were to skyrocket here back to these prior highs, anywhere 34 to 40, then that hopefully also is in alignment with our desired scenario this week to blast through new lows and get the internals into bullish alignment. All right, IBM. I mentioned Netflix. Netflix, we actually, and this is one of our strategies, and I clearly said, just so people wouldn't get confused, I said this was earnings where it just got shellacked, down to $360 to 210, just shellacking on a big FANG stock. So I said excessive gap, parentheses, but very bearish. I didn't want people scratching their head, but this is a strategy that we do where we wait for stabilization intraday, which we did on the 15-minute chart before we entered it, and we sell way out of the money puts because the volatility is through the roof after earnings in bearish news or bearish gaps. And so we sold the 190s, way out of the money, 3 DTE, and we took in like a $1.02. And even though the stock went against us, we still closed it out at over 50% of max profit, and that's because of the volatility contraction. So what I would love to see this next week is for this to tank some more. More the better. Tank. Get down to 180, 170. Then we'll be watching it on a 15-minute chart for climactic buy setup. And guess what? We're going to do it again. Meaning sell out of the money put or put spread, high volatility. We make money on the volatility contraction and time decay. That's what we do in selling options using the master trader approach. Continuing here, EXTN. This was a beautiful wide range closing breakout. In fact, daily, weekly, monthly, we're in alignment, and we did last week's master trader trade review on this. We're talking in detail about the concept of multiple time frames. And I since we had a beautiful open gain, we bought it at $7. So you can see we're almost up 10% already, but I was going for bigger gains based on the weekly and monthly void, but I still moved it to break even because I wasn't going to turn that into a loser. And so that one stopped out, break even. GTE, another one is beautiful closing breakout. We had a nice open gain. When I said I was managing our longs very tightly, that's because what I call the mothership, which is the 4 horsemen index ETFs, were in a bad mood, and so I'm playing defense on the longs, if not even selling it, so some or all to take partial profits, or at a minimum, a moving stop break even, provided that makes sense on the chart. Dish, all right, this was a victim. We bought this little buy setup here. We had an open gain, and then the victim of the market stopped us out under that tail. And we also had a Dish put spread where we sold the $30 puts. It would have expired at full profit, but I had tightened the stop under here. And so, we stopped out at 5 cents though. So that one was a winning trade, whereas the equity was not. MET-C. Here's another one, wide range breakout from all these red bars ignored, and we got the benefit of that rally and just we're in trail mode. Citra, same. This is what we call a bullish 1, 2, 3 continuation. We bought that, went into nice simple trail mode. BTU, similar. See, so we had a lot of marvelous longs too. So we rode it up. Got off the longs, started shorting like a banshee on, that Thursday morning. CCJ, this was a 1, 2, 3 right here. Bought, trail stopped out, but that was a nice trade. Diamonds, we bought, okay, so this one did not work. Well, on this breakdown here, when we had the bull sandwich that I showed you on the spiders earlier, we bought puts expecting all of the markets to go down here, and when it had that crazy reversal right there, that stopped us out. JB Hunt, another transport that we did a climb-o on. It had earnings. This crazy whip day right there was earnings. We bought it the following day, and I kept a tight stop on it. So we had a small kind of day trade gain there. MTB, another earnings stock right here. Kind of a W bottom retest at the 200 and support. We sold a way out of the money, 150 put, and we did a put spread, the 150, 135 for $1.20, and then I just saw it going crazy. I'm like, I don't know what's going on here. My up alarms kept going off, and I said, you know what? We were at 50% of max profit in one day. Take it. Because it was a monthly. If you can make 50% of your money in one day and eliminate 30 days of risk, I mean, just use common sense, folks. You got rocks in your head to want to leave that open for 30 days. Take your money, go to move on to the next bus coming by. Twilio had a nice little short here, and actually that green day stopped us out, but at a nice profit. And wow, nice 180 reversal there. On Daku, this one also, we shorted this day, and then the green bar stopped us out break even. So see, I was tightening stops on the shorts on that bullish reversal day that I showed you on the spiders. So there was a little bit of whipping around last week, but I think we did a phenomenal job, both in finding compelling long and short setups and managing them. Adobe, we had a nice little short there. That still looks lower. I mean, look at this, folks. This is a Wall Street darling. Adobe was $700, now 408. There's so many stocks that are devastated, and Greg's been doing a phenomenal job, doing this video that you all get, obviously, of warnings. He's like, warning, there's nothing bullish about this market, you better be careful. He was clear as day. So Pump here, Pump, I think we bought this little gap breakout, trail stopped into strength. I trail stopped right over here. We had a nice little gain, and so we did not get the benefit of that gap up. But had we were still in that, I would have said, just because I know me, I would have said stop for half 5-minute low, stop 30-minute low for the back half, and see that corresponded with the gap reversal in the broader market also. Snap, we shorted the stock. It had earnings, so I kept a tighter stop on it, but we were able to close it out before earnings at a nice little gain. Wow, we were extremely active last week. I still got more here to review. TRMB, we shorted the stock. This 1, 2, 3 bear continuation. This was in last weekend's letter, and we just trailed for a nice profit. Halliburton, we bought the stock, a little 1, 2, 3 here, and we sold it before earnings, so we sold it pretty darn near the top there. That was fantastic. Management upwork here, shorted this breakdown here, stopped out break even on the bounce. TTD, shorted the stock right over here, and I'm showing that this one stopped out at a loss. Okay, so this deep bounce should not have done that. So this tail, our stop was over there. So that one was a clean short, and it bounced more than we thought, and so that one stopped out. I have another spider here. We did a 445 a bear put debit spread. All right, so we did a second one in addition to the one that I told you about earlier. All right, so that one was another one. LCID, we shorted this breakdown. It was in the last weekend's letter. In this little pop right there, stopped us out on that little bounce. So, you know, so that one was a victim of my tighter stops because of the market bullish reversal. Although if we kept the original stop back here, we'd still be in it. But this looks horrible. As you'll see, we're giving it as a new idea. IONQ. This was also a short in last weekend's letter, and we stopped out break even on that tiny little pop. Again, it's when I was tightening stops when we had that bullish market reversal, but that one would have worked out if we gave it more room. And finally, Triple M, we shorted this little breakdown, and that bounce stopped out. It's just a mess now. It's in a big trading range mess. So this has nothing to do with this. So wow, that was a marathon of trades there. All right, so good job. I defended our rationale, the management, the longs, the shorts, the stops. So this was longer than usual, but I hope it helped. As always, any questions, email Greg or me. Good trading. We'll be in touch as always during the weekend. Telegram.